Hello, good weekend to all. I'm bringing you a view of the European markets this week, really, for this weekend. So a Eurocentric sort of viewpoint, given the fact that Germany obviously has gone back into full lockdown now. Obviously, certainly increased their obviously restrictions, and let's see what the impact will be on the FTSE, especially given the fact that we have this no-deal Brexit now, and obviously this deadline looming as well. Even though they kicked the can again over the weekend, it'll be interesting to see what the market is doing, especially post ECB as well. Be sure to visit me at www.market-analysis.com, and obviously you know my Twitter handle there, and obviously you're following the YouTube videos. Okay, so let's have a look here in terms of the actual FTSE first and foremost, because that's the main focus from my perspective really on a day-to-day basis. Although obviously I do trade European indices as well, and those that obviously want access to that, you can join the live analysis service. Just follow the details on the site. Okay, in terms of the FTSE 100 then on a weekly chart, always looking at a perspective of an eagle, a hawk's view really. Let's have a look here. So bird's eye view, we're still struggling at that fib 61%, which again obviously coincides with previous support equals resistance. I mean, there's no secret there based on technical analysis. Fib 61, previous support equals resistance, is the solid obviously level to watch out for. Obviously we break that key zone around the 6620, then obviously the bulls certainly have the 75%, and then previous resistance equals support at the 7,000 zone. Okay, so watch out above. In terms of the downside, obviously the downside limit, as we can see here, is at 5600 level. Again, that's the potential scenario with regards to no deal Brexit, and how we interpret that, again, it's going to be everybody's puzzle to solve really. I mean, we're in unprecedented times. I mean, how do you trade through a Brexit scenario? Nobody really knows. We've not really encountered that before. So again, every day is different. It's very hard for me to forecast obviously ahead. We all know this current rally obviously from here, from 6 to around 6,300 obviously up to 6,600 was based on the actual COVID vaccine euphoria rally. Okay, and obviously it was sustained and continued from the pivot low of 5,400 as well. So you take that into consideration. Obviously the this rally here on the 5,600 really was helped by the QE obviously expectations as well going forward, given the fact, and obviously the furlough, fiscal stimulus as well, etc. So where do we obviously set ourselves now? I mean, obviously you can see the daily chart here, this key zone here around the 600 zone. Previous support equals resistance is a key level to watch. You've got a bearish engulfing candle after 1, 2, 3, 4, 5, 6, 7, 8 potential days of rally, 9th day of pullback. And now the pivot high on the actual smaller time frames here on the 60-minute chart is around 6640, so watch out 6640 on the upside. Okay, now we are setting up a potential HNS formation. Now, how many times have I said HNS formation only for the markets to continue rip higher to new highs? So you've got this right shoulder here. Okay, so again, the markets decide, not my analysis, unfortunately. I wish it did. Okay, so again, this can certainly be negated if we go above 6640, and obviously the bearish pattern is obviously out of the window now. The actual factors behind the obviously rally, number one, obviously we're severely overcooked. The market certainly has rallied quite considerably, as you can see on the daily chart, and therefore one would argue that you are looking for a potential pullback. That's number one. Number two, obviously no Brexit or Brexit failure. No deal Brexit is obviously a lot of uncertainty and risk aversion as well. The vaccine, there have been some concerns regarding that over the weekend. I think there was potential 2 reported deaths as well in the Jerusalem Post, and obviously the side effects of that, given the fact that 2 individuals that were allergic, etc. So again, that certainly raises concerns there. And also we've got the situation with regards to Europe now, Germany going back into a full lockdown. The latest news flow that I'm reading here as well from Linda Yu, London's COVID-19 rates are now the highest in England, according to Public Health England, with almost 192 cases per 100,000 for the week of December to December the 6th, up from 158 per 100,000 the previous week. So that's 158 per 100,000, 100k, and now it's 192 cases per 100k. So that isn't exactly bullish reading, okay? And given the fact that Germany obviously has gone ahead with even more stricter measures, then one would certainly argue that potentially Christmas could be off, and obviously we can continue in the new year, and that certainly isn't looking good at all. Okay, anyway, that's the situation, and we have to deal with that, and we've been dealing with that since March now. If the market obviously breaks the 6520 zone, then obviously the H&S formation is triggered, and therefore you're looking for 6466 and then potentially 6400 on the downside in terms of the FTSE at 60-minute chart. The 10-minute chart, you got an unfilled gap here at 6600, obviously resistance at 6630 with a pivot high at 6640. I certainly will be tempted to short the FTSE, given the fact that we have seen weakness in the US markets as well on Friday. So, and given the fact that Nasdaq is under pressure, and that's been the real catalyst for the rally in terms of US stocks. Also, the potential scenario of a fiscal stimulus package towards the end of the year is certainly looking even dimmer and dimmer, given the uncertainty and the disputation amongst the actual Senate, or Republican-controlled Senate, should I say. So that certainly isn't looking good going forward, and obviously the COVID rates in the US certainly are spiking as well, certainly out of control. Now, in terms of the vaccine euphoria, obviously that certainly has been baked in, so certainly take that into consideration. If the obviously market flushes and you do have an unfilled gap at 6490 on the FTSE, you've got support at 6460, and then obviously ultimate support at 6420, and obviously the market continues to flush, then there is a massive gap below down at 6270. But again, let the market decide. Okay. In terms of the sister, obviously indices, in terms of the FTSE now, the FTSE 250 obviously has had a stellar rally, and again, we really are in no man's land in terms of key resistance. There's no real resistance here in terms of the FTSE here, from what you can actually categorically state. This was the only key level that I could certainly potentially see, but even that's been taken out now. Really, I think we're relying on in terms of the actual sell-off is the fib retracement, and we were around the fib 75% resistance zone. Okay, so that certainly is something to consider. Really, it's very hard for me to pinpoint a key resistance zone for the FTSE 250 here. Really, I mean, on the daily chart, let's see if anything comes up on the weekly. Again, we were in that fib 75%, so it has been quite impressive to say the least. And really, last week was just an inside bar on the weekly chart. In terms of daily chart for the FTSE 250, obviously we have been coming down already. If the market does obviously continue to flush lower, given the no-deal Brexit, it will be very bearish for the FTSE 250, so bear that in mind. In terms of FTSE 350, to get a holistic perspective on obviously all the top 350 UK indices, again, it's a bearish engulfing candle on a daily chart. Okay, and if you do obviously start to pull back on this no-deal Brexit scenario, then certainly markets can easily go into risk off and continue to push low. But bear in mind, you do have that 650 retest, so again, we'll have to assess in terms of the markets on Monday's trading. Now, in terms of the German DAX, okay, so impressive thrust on the German DAX here. Let's just bring this quickly up for you, give you an insight. Okay, now we had a thrust higher, obviously, with the vaccine euphoria. We've hit that double top. Ever since we put in that topping tail, obviously it's been bearish. Given the fact that obviously Germany has increased its COVID measures, don't be surprised if we see gap fills tomorrow, okay, around the 12,480 and 12,330 zone on the German DAX, and obviously you've got unfilled gap at 11,800 as well. So it'll be interesting to see exactly what happens. Mine, obviously, interpretation is you are going to see risk off, and given the fact that the markets weren't exactly euphoric post ECB, certainly an argument for a flush here. The French market, okay, still failed to close the gap on the euphoric rally, so therefore that is a bearish sign straight away. In terms of the downside, you do have a potential gap here at 5,400 initially. Okay, sorry, 5,405. I might just draw this properly once. Okay. So you've got this key at 5,386, and then obviously you've got the ultimate gap fill at 5,000 and potentially 4,690. So keep an eye on the French CAC as well, given the fact that post ECB the markets weren't as euphoric because they didn't expect, well, certainly failure for Ms. Lagarde to be as dovish as everybody expected. So the euro still is around the 1.21 zone. So again, a stronger euro is certainly hurting European indices. So keep that in mind. In terms of the FTSE MIB, again, starting to reverse. Okay. And obviously these stricter lockdown measures certainly will be the catalyst. In terms of Euro Stocks 50, let's have a look here on the daily chart. Obviously we've held that key resistance and the market certainly, after that topping tail, we certainly got a flush. We've closed the gap below at 3464. Now the next gap is actually seen at 3434, and then the ultimate gap is 3200, which will be interesting to see if the markets can certainly close that. Now it has been quite a stellar rally on the Euro stocks from 2900 up to 3600. Very, very impressive. We still failed to close the gap around the 3580 zone, and obviously in terms of the stricter COVID measures, we'll see exactly how the markets interpret that with the stronger euro as well. Okay, so it really is tilted toward the downside, that's my understanding, and any potential pop on the FTSE certainly will be happy to short, as you can see here, 6600 and 630 until obviously they give way. I wish you the best for the trading week ahead, and be sure to follow my website. Take care now. Goodbye.